Hello you lucky people, let me show you how to pass your ACCA financial reporting examination, taking you through some Section B tips that I'd be implementing if I was sitting the exam just like yourself, and also we'll take you through some keynotes, again what I'd be putting into practice that I help students around the world to pass their examinations. If you want access to the notes and also extra videos, click the links in the description of this video and they're definitely going to help you to pass, especially if you push for time around work commitments and other things. But this video is specifically for Section B, where you've got 3 OT cases, 2 marks per question, 5 questions per case that you have, and 30 marks in total. Now, for your notes that I advise students who I help out to pass their exams is that I actually advise them to do Section B last in the examination. Go Section A first, then Section C, and Section B to finish, because it tends to be students find Section C the most difficult to interpret. They need a bit more time to go through, and that's where for the 30 marks here, you should be on about 54 minutes in the examination at 1.8 minutes per mark. But let's jump into an actual question so you can see what it would be like as per the financial reporting specimen examination paper. And this is sort of a classic question you can see on the screen here, IAS 36, impairment of assets. Now in your examination, there are going to be some questions where it has nothing to do in Section B specifically to the scenario. So you can see it on the side there. We're given that Telepath Co. as an item of plant and a few other details down here. But if we look at the requirement with these tokens that we're going to have to shift over, it's where we go here and then we say, well, hang on, this doesn't actually have anything to do with Telepath. This is testing my actual financial reporting knowledge on IAS 36 in this case. So you've just got to be careful as to, first of all, a good exam technique part for part B, is it relating to the scenario, yes or no? Or is it just asking me to demonstrate knowledge? So you can see on here, use the tokens to complete the following definitions in accordance with IAS 36, impairment of assets on there. And an asset is impaired if its something is something than its recoverable amount. In turn, the recoverable amount of an asset is defined as the higher of its fair value, less costs of disposal, and it's something there. So straight away, what would I do if this came up on the examination? Well, I'm going straight away to those tokens to see, do I understand what they mean? Because when we come on to the answer, sadly ACCA don't put definitions down, because when a student's really pushed, you go, oh gosh, what does carry out mean? And replacement costs on there. Don't worry, they're in my notes if you download them on there. So you've got on there just to go through it as to, you've got replacement costs, historical costs, less or greater. And this is where the key bit here is the recoverable amount on there. In other words, what is the actual asset that you have currently worth on there? Or in turn, the recoverable amount of an asset is defined as the higher of its fair value, less cost of disposal, and woof, on there. I'm trying not to give it away so you can go, I know what it is, James. I know the answer. So then you've got to say, right, something is either, so we know this box here is either going to be less or greater, but to demonstrate your knowledge on there, it's going to be what is known as the carrying amount on there. That's the value of the asset within the statement of financial position, less any accumulated depreciation on there. We have to say an asset is impaired was the first key thing. So again, it comes down to reading that question carefully. What that simply means, if we impair an asset, we reduce its value. So this is where, if its carrying amount is higher or lower than the recoverable amount, in turn, again, we'll come on to the answer, because I'm hoping that you'll be going through this video now going, James, I know the answer. So hopefully you've got on there that you've got its greater than on there. So that is where saying, and try to keep it simple for yourself to say, right, I've got the carrying amount on there, the value in the statement of financial position, less any accumulated depreciation, is greater than the recoverable amount on there. So that is, what is the value of that asset currently, of its fair value, less any costs, and the key bit there is its value in use. In other words, just try and think about that asset, is that it's in the statement of financial position, in the annual report on there for stakeholders to view, versus on there the recoverable amount, how much is it actually physically worth in the real world. It can't be historical cost, because that is referring to what was the cost when it was first purchased, so not taking into account any accumulated depreciation on there. It's not less, because we're asked about reducing the value of the asset and it being impaired, and we didn't have any, the wording of the question wasn't done in such a way that a replacement cost would have been put into this sort of one on here. So it was just reading between the lines, interpreting it correctly, and moving on from there. So that was a good example to get us going. And then really we've got other ones on here. So you've got bits on revaluation. Let's take question 18 as an example. So we're asked to calculate the value of use of telepath closed plant at the 30th of September 2003. This is the third question for this scenario based on here. And basically the first paragraph would usually relate to the first question on there. This is the second one after we had the one where it was just going through about the IAS knowledge. And what it's saying here is calculate the use of that plant and what is its current value. So just looking at it logically here, and for anyone who's not done the financial management examination, we've been given some what is known as cost of capital and discount factors here. And what it's saying is, for your notes to help you out if this comes up on your exam, is that as at the 2003 accounts, which we're working on here, so the 30th of September 2003, the value of the plant in the future from the estimated cash flows are not the same as in 1 year's time, 2 years' time, 3 years' time, as the present value as at today. So what we're saying here is, let's put it more simply, $220,000, as you can see highlighted there, is the cash flow in 2004. But that is not worth the same as at today because of the time value of money. Things go down in value through inflation, risk, opportunity cost on there. So we need to bring that $220,000 back to the present value. And that is where the discount factor comes in, as you can see at the bottom, of 0.91 for 2004. So we can get, what we can do is we can get the calculator out like we've done before and go, okay, 220,000, I'll do it exactly as if I'm you, 1, 2, 3, multiply it by 0.91. So what this is saying is that in 2004, that cash flow is worth 220,000, but as at the 30th of December 2003, in real terms, as at today, it's only 200,200. And we do the same exactly for 2005, so take 180,000 on there. Be careful on your zeros as well, just to make sure we're crystal clear. Multiply it by the next discount factor, so this brings it back 2 years now of 0.83. Notice you've got the discount factor on there, reducing it down even further. So that 180,000 is actually worth, as at the 30th of September 2003, 149,400. And we need to do the last one whilst we're at it. It's 200,000 on there. 2, 3, multiplied by 0.75 equal to 150,000. So that's where it brings into account. Those are our 3 different cash flows, and what you would do for the answer is simply total them up, as you can see on here. So we'll take 149,400 and 150,000 on there, and then we add it to the first cash flow, which is taken off, which is a bit annoying. So see if it will come up on that. Okay, so 200,200. Let's see if we can do it. 200,200 plus 149,400 plus 150,000, and that gives us our final answer of 499,600. 499, and you have to give the whole number as it asks for in the requirement in whole dollars, and that would be our answer for this question, which if we hop onto here for the answer, 499,600, but with a bit more of an explanation as a result on there. So it's just to give you an example as to applying figures within a question, and then also applying your financial reporting knowledge as well on top of that. Just to finally showcase this a bit more clearly as to the notes, which again you can download, On here, I've just got down those definitions to help you out, especially if you're a bit pushed for time. So we looked at question 16, the carrying amount being greater than the recoverable amount on there, stating what it actually means, along with historical costs. Then we also had the workings along with the years at the bottom here. Again, for you to check out, it goes through every single question, section A, section B, there's also section C notes on there for the whole specimen examination, and I hope that could be the difference in helping you to pass your next financial reporting exam, to get you over the line and to hit that 50 plus, which I know you can get on there as well. So I hope you've enjoyed today's video. Be sure to give it a massive like and subscribe to the channel so you don't miss out on any future videos. Click the links in the description below to access the documents on there and further videos. And I'll see you in another video on the other side, which I've linked up at the top here. Click on, it's definitely going to help you out to pass your exam. Best of luck and good luck with your exam.